Hello and welcome to the Wealthy Trades weekly market forecast. This is also going to be the May 11th daily forecast, and I'm going to do a little recap of last week's price action. Also, this week we are going to be going long. We'll go over this in a minute, but we're going to be going long in the consumer staples sector, and we're not going to do a pairs trade like we did last week. But before I go into that, let me kind of recap last week's core trade. It's one of the trades that I do with the largest size, but what we did is we did a pairs trade because the quality of that Wealthy Trades was showing was not above 50%, so therefore we wanted to do a pairs trade. And the pairs trade we did was long UNH and short SWN. So UNH for the week, it actually ended up opening at about 113 and closing at about 115.68, so good trade there. And then the SWN opened the week at about 27.80 28.80. Sorry about that, and closed at about 28.94. So down slightly there. Overall, up about 0.7% for the week. So it was a good week for us being long UNH. Short SWN. At one time, because SWN was down so much, and then the energy sector got a big rally on Friday, but at one time we were up about almost 3% in this trade, in the face where the market was down about 1%. So our outperformance was pretty substantial. I do also want to recap what we're doing on a monthly basis. We're long in the XLV, and then the best stock within the XLV is Cardinal Health, CAH. So far, looking real good. Pretty good overall for the month. We actually opened the month at about 72.82, give or take. We're at about 73.45 right now. So up decent. Pretty close, pushing almost that 1% mark. Up on that. And then CAH opened the month at, this one I believe opened the month at 85.77, is at 86.65. So looking really good right now. We've been along CAH since March, so overall not real bad. And then the SPY, just to go into this, I do want to recap the SPY a little bit. The SPY opened the month at 211.23. Is at 211.62, so up slightly. But the XLV is outperforming the SPY right now, and CAH is also outperforming the S&P 500 overall for this month. And so I'll kind of go into that a little more also. But I want to recap, and I actually want to go into some of the levels on the SPY. Okay, so the SPY last week was actually very interesting, and what happened was the SPY actually went down, hit the counter trend level, and then rallied aggressively from there. And we're sitting at, I've been talking about this, for a while, but we're sitting at some key levels, and it looks like we are putting in some nice bullish patterns. Now, the thing we're going to want to do, especially because last week we put in a low of what was the low here? We put in a low of 206.76, which is actually lower than the prior week, which was 207.62. We put a high in the prior week of 212.48, and technically we only put a high in of 212.02. So we kind of had what's called an inside week, essentially. We had a higher high the week prior and a lower low the week prior, so we had kind of an inside week. Now, that's important because, we had a little bit of a lower low last week. But the reason why that's important, so it wasn't quite an inside week. But what we might be seeing is, technically, we might be seeing a lower low, lower high, but with the strength on Friday, if we do break above this 212 level and close above that, I think we're going to rally aggressively. And as I've been saying for a while now, it seems like forever, I've been saying that if we break 204 to the downside, I think we're going to 180 or 1800 in the S&P 500. If we break 212 on the upside, I think we're going to about 2300 or 230 in the S&P 500 in the SPY. So that is what I believe is going to happen. And but anyway, all this month we are going to be long the XLV. The reason why we're going to be long the XLV is because we are in an uptrend. The quality is above 50%. The quality is sitting at 57.3%. What does that mean? It means that in the stocks that are moving up, we know that 75% of the S&P 500 on a monthly basis, because I'm clicked on a monthly, are moving in an uptrend. So therefore, we got to be buyers. And out of that, 57.3% of those continue to show nice momentum to the upside. Now, this is based on April's market, but it continues to show nice momentum. And CAH is the stock we're going to stay long all month long. That's going to be our plan. Okay, so that is the deal. For this week, we're going to do something fairly similar because we have 71.9% of the S&P 500 stocks moving in an uptrend. Okay, the momentum last week, if you remember, the trend quality that Wealthy Trades was showing was below 50%, so we did a pairs trade. But this week, we are showing that the momentum has a high quality or good enough quality for us to go just long in the best sector. And remember, these are all ranked on which sectors provide the best opportunities. Right now, the XLP, or the consumer staples sector, offers the best opportunity. So we're going to look for a long opportunity in the consumer staples sector. So what I'm going to do, I'm going to hit the plus symbol next to the XLP. And I'm going to go down and look at these are the top 8 stocks. So not only do we know the market's moving up and the quality's good and the XLP is the best sector, but I scroll down, and this is on the home page of the dashboard. I scroll down, and this gives me the 8 best stocks within the XLP to go long in it. So if I just did a basket trade in all eight of these stocks, those would be the 8 best stocks within the consumer staples sector to go long all week this week, or this upcoming week. But I'm not just going to do that. What I'm going to do is I'm going to use my pair down technique, okay? In my pair down technique, what I do is, so I brought all those, I'm going to go back. So I brought all those into my portfolio by hitting the plus symbol, right? So those brought into my portfolio. My portfolio tab is this center tab. So when I click on my portfolio, I'm going to then click on the weekly tab, because we're looking at this on a weekly basis. And I'm going to eliminate SWN and UNH because those were last week's trades, up about 0.7%. But what I'm going to do is I'm going to use my pair down technique. And this is, I'm going to use the levels to win data. So this data right here, what this is telling me, okay, is telling me this. So MNST, all right, I'm clicked on that stock. It closed at 128.47. Well, I know Wealthy Trades is telling me, based on the data, historical data, it's telling me that MNST should move up. All right, its expected high this week when it's in an uptrend is 131.95. Closed at 128.47. The expected low is 124.99. Then I know historically it hits this expected high 50% of the time. All right, that's good, and it only hits the downside 26.9% of the time. So obviously, if I just had that information, me going long Monster Beverage is the way to go, right? Because it has a much higher probability of hitting the upside than the downside. That's good. Well, that shouldn't surprise anybody because we're in an uptrend. That's the reason why the trend is so important. But we take it further than that. What I want to know, my first filtering technique is when it hits this upside, so we know it hits at 50% of the time, but when it hits this, does it continue to go in the direction of the trend? So does it continue to rally before the end of the week? And the answer is yes, because it makes the levels to win profit, tells me historically if you would have traded at this level, if price hits this expected high, historically, it continues to rally and closes higher than that by the end of the week. I know that because it's made money. It's made $37. On the other side, if it sells off and it hits the expected downside, historically, it ends up closing lower than that. How do I know that? Because it loses money. If you would have bought here at the expected low, historically, all right, during the week and it hits its expected low in an uptrend, historically, that's a losing trade. So, for example, you can use this information to your advantage. If you're long Monster Beverage this week, then going long and holding it all week long until the end of the week is the way to go. Unless it hits 124.99. Having your stop there is the way to go, because when it hits that expected downside low, the 124.99, it tends to close lower than that. So if you're long MNST, I would go long all week long and put my stop at 124.99. That's not going to be my trade though. Okay. In fact, I'm going to get rid of MNST because it loses money on the counter trend side. I want to see stocks that make money on both sides. It's my indication that when this is a very strong trending stock. RAI is a stock that if you were long, then you know what? I would put my target at 78.13. Why? Because when it hits that, it hits it often. It hits it 65.4% of the time. But when it does, it typically loses money. So I'm going to put a target there. If I was long RAI, I'd put a target at 78.13, and I'd put a stop at 75.01 because it loses money. But I'm not going to trade that one either. All right, I'm going to eliminate anything that loses money on either side. So if it loses money on the trend or counter trend side, it's gone. So KR, for example, does not lose money. What does that mean? Well, it closed at 71.79. Its expected high is 73.12. When it hits that, all right, it hits it 63.5% of the time. When it hits that, it tends to close higher. I know that because it makes money on the levels to win profit. Well, on the downside, it's got an expected low of 70.46. When it hits that, it typically bounces off and closes higher, which is what I want. It indicates a strong trend. How do I know? Because it makes money. This is always in the direction of the trend. So therefore, KR meets my requirements. All right, I'm going to go on, and again, KO loses money on the counter trend side. I'm going to eliminate it. GIS loses money. I'm going to eliminate it. The XLP itself does good. XLV is our monthly trade, so I'm going to actually get rid of those. We know what we're doing for the month. We're long the XLV and CAH. CVS looks good. DPS is eliminated. So now we got it pared down to these three opportunities for this week. All right, KR, CVS. We know CVS closed at 100.66. Expected high is 102.21. Expected low is 99.11. It hits the upside 55.8% of the time. And when it does, it usually closes above because it makes money. It only hits the downside 38.5% of the time. That's good. We want to see a wide spread there. But when it hits that, that's also a good place to go long. So if I put CVS on my watch list, I have three entries. I could go long at the open. I could also go long if it hits 102.21. Going long there historically is a good position to go long at and close at the end of the week because it makes money. Or let's say we open up on Monday and we have weakness. Well, I could put a long opportunity. I could place an order to go long at 99.11 because when it hits that, it has a tendency to close higher because it makes money. But I want to find the best opportunity for this week. The way I'm going to do it is, now we know all three of these make money on the trend and counter trend side. I'm going to take it further though. I want to find the one that has the largest spread between the levels on levels. What this is telling me is the probability of it closing above 102.22, and historically 30.8% of the time it closes above this level. And it tells me the probability of it closing below this level. So 99.11, I want this to be low because I'm going long. I want it to have a low probability of closing below the expected low, and I want it to have a high probability of it closing above the expected high, right? So I want a wide spread. This is about a 15% spread or so. Well, I'm going to compare that. This is much wider spread, so I want a real wide spread. So KR is better than CVS. KR has 42 and 13. Well, this one only has 30 and 15. So KR is much better. Well, let's look at the XLP. 32 and 21. KR is the best. KR is going to be our long opportunity for this week. Here's what I'm going to do. I'm going to go long at the open on Monday. I'm going to hold it all week long and close it at the end of the week. If it hits 70.46, I'm going to enter. I'm going to actually add to the position there because that's a good place to enter. It makes money. Doesn't hit that often, but when it does, it typically bounces off and closes higher. I know that because it makes money there. I'm also going to add at 73.12 because it does hit that often, and when it does, it typically makes money and rallies even higher. So KR is my long position. I'm going to open at the end at the beginning of the week, close at the end. I'm going to add at 70.46, and I'm going to add at 73.12, and I'm going to close both positions at the end of the week. That is my weekly trade. Okay, now let's go into our day trades. Our day trade is a little different. This is for Monday, and the reason why it's different is because we're in a downtrend. You're like, why are we in a downtrend? The breadth of this rally that we've been in has not been great, meaning there's been a few leaders, big leaders in this market, but most of the stock, more stocks than not, are moving down. We have 63.5% of the S&P 500 moving in a downtrend. Right, so this rally hasn't actually been there hasn't been a ton of stocks. There's been a decent amount of stocks participating, but it hasn't been a huge rally with a lot of stocks. In fact, there's been a lot of stocks kind of struggling at these levels. So what we're going to do, because the quality is below 50%, we're going to do a pairs trade. I'm going to go short. I'm going to find the best short-in opportunity in the XLU, all right, and the best long opportunity in the XLB. So let's find the best short first, and I'm going to go through this kind of quick, but I'm going to use my paired-on technique. I'm bringing all this over into my portfolio, okay, all right. So I'm going to find the best shorting opportunity in the XLU. And I got to remember my weekly basis. Remember my long is KR. So I'm going to click on the daily, and I'm going to use my same paired-on technique, all right. If it loses money, I get rid of it. So I'm going to go kind of quick here. Anything that loses money is gone, and I'm going to skip KR because that's our weekly trade. All right, so I'm going to go kind of quick. AEP, get rid of. XLU, I got rid of. CMS, see you later. CNP is good. EIX, buy. NE is good, and PNW is good. Okay, so we got these three: PNW, NEE, and CNP. So now I'm going to look which one has the widest spread. All right. As you notice, remember KR was in an uptrend, so the trend side was higher. PNW, these are in a downtrend, closed at 59.86. These are in a downtrend, so the trend side is going to be lower. Okay, you got to that should hopefully make sense to you. Anyway, I want to see the widest spread between the trend and the counter trend. All right, so this is like a 9% spread compared to, well, this is way wider, right? That's a 27% spread. Well, let's look at that compared to CNP. Well, NEE is the short because 38 and 11 is wider than 26 and 9. So NEE is going to be our short for Monday. We're going to short at the open. hold all day long, close at the end of the day. We could also add at the trend level and the counter trend level short and close at the end of the day. But here's the thing, we got to pair that with another trade. We've got to pair that because the quality of this downtrend on a daily basis is not good. So we're going to pair that with the sector that's in an uptrend, which is the XLB. So I'm going to move the material sector and the stocks in my portfolio. I know I'm going kind of quick, but that's the reason why you need to watch these videos every day. I post these videos in our resource section. All right, let me show you. Click on, log in, click on resources, and then go to podcasts, and I post these before the market opens, so you can kind of see. And you watch these a couple times, you realize it's the same process every day. So now I'm looking for the best long opportunity. I'm going to use the same pairing technique, right? Same pair down technique. I'm going to eliminate anything that doesn't make money on both sides. If it loses money on one of the sides, it's gone. So EMN, see you later. AA, bye. Okay, so now we got it down to these. So now I'm gonna look. Okay, so SIAL 21 and 11 compared to 36 and 13. All right, OI is much better, right? Well, let's look at MWV. We got 21 and 5 compared to 36 and 13. 36 and 13 is better. Now let's look at CF. So 36 and 13 or 35 and 34.6. So these are real close, right? These are really close. So which one's better? Well, the one that I'm actually going to go with is going to be CF because it's more profitable on both sides. It makes more money and it closes below the counter trend level less than OI. So CF is better than OI. So BLL 21 and 9. That's not as good as 34 and 9. So get rid of that. And then let's look at the XLB. 17 and 15, not as good. All right, so here's our play for tomorrow. What we're going to do is we are going to go short NEE. You can add at both of these levels short. We're going to go long CF. You can add at both of these levels long. We're going to close both of them at the end of the day. So we're going to go short NEE, long CF at the beginning of the day, close at the end of the day. We're also, for our weekly trade, we're going to go long KR. Okay, I'm going to long KR and I'm going to close at the end of the week. And you can add, I can add at these trend and counter trend levels because those are good places to add. You got to understand what the levels to win data and Wealthy Trades data is telling you. Let's look at, for example, let's look at GLD. All right, let's look at GLD on a weekly basis just so we understand what's going on. It's moving up. It's in an uptrend. Closed at 113.97. The expected high this week is 115.36. The expected low was 112.34. It actually hits the counter trend side more often than it hits the trend side. But here's the deal: if I were long GLD, the gold ETF, I would go long, and I would have no target. Why? Because the expected upside is 115.60. When it hits that, it typically rallies and makes more money. All right, so I'm going to stay long, and I'm not going to have a target, but I'm going to have a stop. My stop is going to be 112.34. Why? Because when it hits that, it typically ends up going even lower. In fact, if it hits that level, that might be a good level to short at because it does hit that level often, and it loses money there. So you got two trades in GLD. You go long with no target, close at the end of the week. If it hits 112.34, stop out. In fact, stop and reverse, and you could potentially short at that level. That could be a good shorting opportunity. So understanding what you're looking at, understanding the power of the Wealthy Trades dashboard, our scoring system, and our data is so important. Listen, hopefully we have a great week. We had a great week last week with our weekly trades up 0.7%. Our monthly trades are doing decent. Let's hopefully we have a good week this week. Let me know if you have any questions. Email me, info@wealthytrades.com. I do want to hit real quick, if your trial is about ready to expire, do not let it expire. It's only $74 a month, okay? The subscription is. It's well worth the money. We help you stay in front of the market moves, the true trend. We give you the best sectors and the best stock in each sector. It's absolutely invaluable. Not only that, but the first 1,000 members get that discounted price. It's going to go up to $99 a month after 1,000. And on top of that, you get our earnings alerts and the options course that should be done really soon. This is going to be a $1,000 course, and the first 1,000 members, all right, the first 1,000 members of wealthytrades.com get this options course absolutely free. You got to sign up now. Do not let your trial expire. Sign up, be one of the first 1,000. I'm telling you, $74 a month is well worth it. This options course alone is going to just blow your mind. So let me know if you have any questions. Email me, info@wealthytrades.com. Let's make it a great week.